Interest rate hikes, they are taking a toll on many of you who use credit cards. Good evening and thanks so much for joining us. I'm Marcella Lee. Interest rates have gone up an unprecedented 5 times this year, making it a lot more expensive to borrow money. In fact, credit card interest rates are now at historic highs, and there's growing concern more and more people will fall into debt. CBS 8's Shannon Handy is working for you to figure out ways that could help you save money on your next bill.
We've all heard how interest rates are impacting the housing industry, but if you rely on credit cards, you're affected as well. Just the other day, I got a notice that the rate on a card I rarely use is going up to nearly 29%. With prices up on nearly everything these days, a lot of us are having to rely more on credit cards to get by. But even those aren't immune from inflation. According to creditcards.com, the average interest rate is now 19%, the highest it's ever been.
If you're living paycheck to paycheck and costs are 15–20% more, what are you going to do? Credit card debt. So it's a problem.
I spoke with David Reyes, founder of Reyes Financial Architecture, a financial planning firm. He says unlike mortgages you're locked into, credit card companies can routinely change rates based on market conditions, which is what happened to me recently. I received this notice letting me know the interest rate on my Macy's card is going up to a whopping 28.99%. So is there anything we as consumers can do? I found out there is. First step, call the credit card company and try to negotiate.
See if they'll reduce the rate because they want to keep you because they want to get paid interest. Especially if you have a balance, they're going to be more interested in hopefully negotiating with you to keep that because that's how they make money.
In extreme situations where your debt is mounting, Reyes suggests looking into an equity line of credit, a reverse mortgage, or an equity share, which are becoming more popular.
It's a way to where a company will pay off debt or give you money for home improvement, but there's no payment. In exchange for that, 10 years down the road, you share in a certain percentage of the equity.
I also reached out to Alan Jin, an economics professor at USD's Canal School of Business. In addition to Reyes' tips, he says make sure your credit score is up to date and accurate.
Because if there's mistakes there, that could cost you a lot of money because you might be classified as a higher risk when you actually aren't.
Jin says the ultimate goal of all these rate hikes is to slow the economy to fight inflation. Unfortunately, both he and Reyes predict more hikes are likely, which is why you need to control your spending if possible and take care of your debt sooner than later.
Minimize the use of credit cards, use it only for necessities.
Be smart about things, and I think we need to live within our means a little bit more.
Shannon Handy, CBS 8.
Thanks, Shannon. And don't forget that here at CBS 8, we are working for you. If there's an issue you'd like us to look into, email us at workingforyou@cbs8.com.